All right, let's dive into a real head-scratcher today. We're talking about Vertiv's latest earnings. The company just put up some absolutely spectacular numbers, a huge beat, really, by any measure you can think of. But the stock, it actually went down. So we've got a paradox on our hands, and that's exactly what we're going to solve. Let's get right into it.
So, this is the big question, right? Vertiv absolutely crushed it. They delivered on pretty much every single metric that matters, and yet, the stock finishes the day in the red. How on earth does that happen? Well, to figure it out, we're going to walk through the numbers, we'll unpack the context, and then at the end, we'll make our call on what we think happens next.
Okay, let's start with the big one, the headline number that honestly should have sent this stock to the moon. Adjusted earnings per share came in at a massive $1.24.
And you really have to appreciate the scale of this beat. I mean, Wall Street, the consensus was looking for something around 99 cents. Vertiv didn't just squeak by that number. No, they completely blew it out of the water by 25%. A beat that big is, well, it's pretty much unheard of in this market. It's just exceptionally strong.
And it wasn't just the earnings, The top line, the revenue, was just as impressive. We're talking 29% year-over-year growth. That shows you this isn't just a one-trick pony. There's real, broad-based strength across the entire business.
But hold on, because this number, this is the one that really tells the story of what's coming down the pike. Organic orders, they just exploded. We're talking up 60% from last year. That is a direct, flashing green signal of the massive appetite for their data center stuff, and you guessed it, it's pretty much all being driven by the AI boom.
So how exactly did they pull this off? Let's dig in and dissect the anatomy of this blowout quarter.
Okay, so the key thing to get here is that this was no fluke. First off, that AI data center demand, it's actually accelerating. Then they're just executing flawlessly on their profit margins. And check this out. Their book-to-bill ratio hit 1.4. Now that's a super important metric. It basically means for every dollar of stuff they shipped out the door, they booked $1.40 in new orders. It's like filling the pipeline faster than you're emptying it. And because of that, their backlog, that's all their future work, has swelled to a record $9.5 billion. That gives them incredible visibility into what their revenue is going to look like. And this right here, this shows you the quality of that growth. Their adjusted operating margin hit 22.3%. So what does that mean? It's up 220 basis points from last year. That's 2.2 percentage points, and an incredible 380 basis points from just the last quarter. To put it simply, they are not just selling more stuff, they are making way more profit on every single thing they sell. That is just elite-level execution, plain and simple.
Now, after a quarter like that, you'd expect management to be feeling pretty good, right? Well, they were, and they put their money where their mouth is by raising the bar for the rest of the year.
I mean, just look at the confidence baked into these numbers. They raised their full-year guidance everywhere that counts. Higher sales, higher earnings per share, and they're projecting free cash flow of over $1.5 billion. Let me tell you, those are not the actions of a company that sees any kind of slowdown on the horizon. Not at all.
And if you listen to the earnings call, the theme was crystal clear. It didn't matter who was talking, whether it was the CEO or the executive chair, every single comment they made came back to one thing. That AI-driven demand for their power and cooling stuff, it's getting stronger, not weaker.
They're also playing the long game here, which is great to see. They recently bought this AI software company called Waylay, and it's a really smart move. What it does is add a layer of high-margin subscription software right on top of their main hardware business. This makes their whole package way more valuable and, crucially, a lot harder for customers to leave. It's that classic sticky business model that investors love to see. Okay, so let's just recap. We've got a near-perfect quarter. We've got a super bullish outlook. So let's circle back to that paradox, the market's absolutely bizarre reaction. This timeline just captures the wild ride perfectly. So the results drop super early, before the sun's even up, and bam, the stock immediately jumps 5% in the pre-market. Then the market opens, and it spikes even higher. Everything looks perfect. But then the reversal starts. And by the end of the day, every single one of those gains is wiped out, and the stock closes in the red on huge trading volume. Just a brutal, brutal reversal. So what on earth happened? Well, this is a classic, although pretty extreme case of sell the news. The key here is all about context. You have to remember, the stock had a monster run leading up to this report. It was up about 37% in just the 3 months prior. So even though the results were phenomenal, expectations were already through the roof. It seems like a lot of investors who had ridden that massive wave up just used the good news as the perfect excuse to hit the sell button and lock in their profits.
Okay, so with all that said, where do we go from here? Let's pull all this together and make our official call on Vertiv.
So here's our thesis, and it really comes down to fundamentals versus technicals. The bull case is just undeniable, right? The AI build-out is a multi-year supercycle, and Vertiv's execution is absolutely best in class. The negative we saw? That was purely a technical move. The stock just got a little ahead of itself. Our conclusion? The powerful fundamental story here easily outweighs one weird day of profit-taking.
So here's what we're predicting for Q4 and beyond. Step 1, we fully expect them to meet, or more likely beat, the high end of their already strong Q4 guidance. Step 2, that powerful AI narrative, it isn't going anywhere. It's going to reassert itself as the main theme driving the stock. And Step 3, we anticipate the stock will recover from this little dip as the market finally digests just how strong these results were and starts to look past the short-term noise.
And for all those reasons, our official rating here at Talk Tickers for Vertiv is outperform. Look, we see that one-day sell-off as nothing more than a distraction. The underlying business is firing on all cylinders and is plugged directly into the AI supercycle, which is arguably one of the biggest technological shifts of our lifetime. We're convinced this fundamental strength is what will ultimately win out and drive the stock higher from here.
And as always, please remember, this is not financial advice.